Hi, my name is Jody Tiernan from Tiernan and Associates, and I come to you from Union, Ohio. And today, what we're going to talk about, again, my name is Jody Tiernan from Tiernan and Associates, and what we're going to be talking to you today about is your MK business. We're going to talk to you tonight about some things you need to keep track of, some things you don't need to keep track of, and actually how maybe taxes can help make you money in the ways of recruiting. So, we're going to start by talking about a couple minutes about me. I've been doing this since 1994. My father started the business in 1980, and since 1980, we have processed, I'd say, approximately 90 to 100,000 MK tax returns over all of those years. We've processed a lot of returns. And as I'm sure you can imagine, when you process so many returns for as long as what we have, you have had to deal with what governmental agency more than one occasion? The IRS. So, what separates us from any other accounting firm is the fact that we've got a lot of experience with the IRS, specifically regarding your business. So, when I talk to you tonight about some things I don't recommend or things you need to have, it's not only based on years of classroom, reading periodicals, continuing education, but it's also that direct one on one experience that I've had with the IRS, whether it's been across the table or in phone interviews with when it comes to the IRS, dealing with audits. Again, we processed a lot of tax returns and a lot of MK returns. So we know exactly what the IRS will allow, what they won't allow, and how they want your bookkeeping. So again, that is what separates us from any other accounting firm out there. So that's a little bit about Tiernan and Associates. So where I want to start off with tonight is some things you need to keep track of, basic things that you need to keep track of with Section 1 items. Other than your sales, there's 5 items that you need to keep track of. So the first one is one that you all will have, whether you're a brand new consultant as of December 1st of 2018 or you're a national, and that's personal use. You're going to have personal use. The second item that you need to keep track of is demos. The third item to keep track of is your hostesses, your hostess credits. The fourth item that you need to keep track of is gifts of Section 1. Now, gifts is a little unique in the fact that it is limited to $25 per person per year wholesale. Now, of all the years that I've been doing returns and all the times I've had to discuss things with the IRS, it's never been an issue. Never been an issue when it comes to the $25 rule. However, like I've told so many other folks in the past, it is crucial that you don't give away a lot of product to that one person or handful of people. And who do we have a tendency to give away a lot of product to? Your mother, your sister, family members. So don't give away the store to those family folks and consider it deductible. So if you've got someone that you've given maybe $88 to, whatever, $88 wholesale, and it was one particular good customer, don't worry about it. But again, don't give away the store to that one person. The next item, that was the fourth item. The fifth item is, what if you've got a product on your shelf and for whatever reason it's still sitting there and it's collecting dust, and maybe it's an item that you don't want to sell, maybe it's expired, and of course the company says you can't sell expired products. I get that, but who still might want that product even though it's in good shape, and maybe you don't want to hostess it, demo it, whatever? Donate it to a charitable organization. Now, when you donate it, there is no limitation as to how much you can give. What you do is you just simply make sure that every item that is donated, you get a list of those items from, you create one yourself, excuse me, you just simply create it yourself, but you need to get something with that donation, that charitable organization, their letterhead saying thank you for the MK product that was donated. Then you take that list of what was donated and the wholesale amount, and you simply attach it to that letter. Easy peasy, very simple. This is a very good way to get rid of product that you no longer want on your shelf. So those are the 5 items that you need to make sure that you keep track of. Well, let's take another step forward. And what about that item or items that may be expired? Or maybe if they're so old, maybe they've got a bit of an odor to them. Maybe they got stuff growing around them. Things you would never, ever want to sell, demo, host. You just want to throw it away. But it's my opinion that there's still that one company that will still want that product no matter how bad it may be, and that's a funeral home. Now, some of you may think it's tacky, but in my opinion, it's better than throwing it away. Why is it better? Is there a profit potential in gifting it to a funeral home? Absolutely. Is there any profit potential or future income in throwing it away? Absolutely not. You say, how can you possibly make money by gifting it to a funeral home? Well, maybe the person that applies it, maybe somehow, some way, there is going to be a sale because of this in the future. There's going to be a much better possibility of that versus throwing it away. So my opinion is never throw away product. You gift it to a funeral home. Now, gifting is the same thing to a business, which is a funeral, as it is an individual. It's still going to be limited to $25 per person per year, but it's still better than throwing it away. So you got a few funeral homes that you got to give it to. Again, better than throwing it away. So those are the 5 things that you need to keep track of. Now, how do you keep track of these things? You just simply write it down, write the name of the item and the wholesale amount, not retail, but the wholesale. Now, one question I get all the time, discontinued products, discontinued items. I'm a car guy, and the way that I look at it is this. They don't make Pontiacs anymore, do they? If you're not a car person, just smile and nod. They don't make Pontiacs anymore. But does that mean that if you've got an old Pontiac, that it's still not worth any money? Absolutely not. You can still sell that Pontiac, right? Exactly. It has value. So the IRS doesn't care whether it's discontinued product from the company or not. The question that you have to ask yourself is, does it still have value? Can you still sell it? Can you still hostess it, gift it? Can you donate it? Now, I want to demo that product if it no longer exists. But my point is, even if it doesn't exist anymore, it still has value. You can still sell it. So whether it's discontinued or not, you still want to account for it as part of your inventory. Very important. Which goes into my next area that I want to talk about is inventory. Why do you keep track of your inventory? When do you keep track of your inventory? Who cares about your inventory? Well, the reason that you need to keep track of the inventory as well, it's the IRS. Because you really don't care what you have on your shelf as December 31st, do you? Probably not. Your director probably really doesn't care either. But the IRS does. So why do they care what's on your shelf as of December 31st? What's the most that you can make per every item that you sell? What's the most anybody can make? 50%, right? That's the most. Most of you make anywhere maybe from 35 to 45%, depending upon gifts and demos and discounts and so on and so forth. But on average, 35 to 45 is normal. That ending inventory determines the amount of profit that you make. It determines that percentage. So that's why you need to do it. Even though you don't think it has value, the IRS does. So when it comes to your ending inventory, what day do you have to do it on? As I've mentioned a couple times, December 31st. But what would people rather do on December 31st? Anything but their inventory, right? But the thing is this, you still have to do it. The IRS is going to tell you to do it. I'm going to tell you to do it. The company is going to tell you to do it. But what if you didn't do it? This is what I would suggest. Even though it's almost a month, go back and estimate what you think you had on that shelf. At least guess what you think you've got. At least guess. It's better than doing what? Nothing. Or it's better than waiting when maybe February, March, April, May, June, July kind of time. So estimate it at least now. All that we need is the total. We don't need that you've got 6 pink lipsticks and 7 plum lipsticks now. We don't need that. You just simply need to at least estimate what you have. Again, it's better than nothing. But it's doing that will determine how much that you get as a percentage of use. Not percentage of use, but percentage of what you make on every item that you sell. And here's a big advantage of dealing with Tyrion Associates. If we get your ending inventory and we look at it, and based on the numbers you provide us that you may only make 2%, and we've got a lot of those in the past. Or maybe you've, based on your ending inventory, you've made 80%. We've got a lot of those too. Is that anywhere possible? Absolutely not. It's not possible at all. So if we end up with numbers that result with those type of percentages, either one extreme 2 or the other extreme 80, we are going to call you. We're going to ask you questions. We are going to help you try to determine what your ending inventory is. Oftentimes we've asked clients over the years, do you think it's possible for your ending inventory number to be wrong? And often the response is yes, it is. So we're going to help you with that, because the last thing that we want you to do is tell the IRS you're only making 2% on every item that you sell, which again, we know that's not accurate. But at the same time, we don't want you to pay any more in tax if you tell the IRS you're making 80% on every item that you sell. So we are here to help you try to figure that out. If you go to the guy down the block, or if you attempt this on your own, good luck. With your business, it's tax return isn't difficult. It's just very different, and that's really where we come into play. We can help you if there's numbers that you're having an issue with. We help fill those numbers in with your help. But that's ending inventory. Ending inventory. The next area I want to talk about is what typically has been considered pretty simple is your sales. Sales is exactly what you think they are. You sell stuff. You write this stuff down, right? No big deal. So let's say, for example, you've got something that you could have sold for $10. You didn't. You sold it for $8. What number do we want? We want the $8. We want the $8. So what happens to the $2 you didn't collect? It's just simply money, as far as the IRS is concerned, you did not want. So it is my tax suggestion to you is that instead of doing the $2 discount where you get no credit for it, it is my suggestion that you do a $2 item that has value. And consider it like a gift. An actual physical product that's worth $2. A physical whole product worth $2. So again, my example is that you've got something for 10, you didn't sell it for 10, you sold it for 8. If you simply discount that $2, it just goes nowhere. But instead of that, my suggestion is to give them a brush or something of that nature that's worth $2 wholesale. That way you get the $2 deduction. Where with the discount, it just simply goes nowhere. So that's some food for thought, not a marketing suggestion, just a tax suggestion. So for you folks, you have 2 types of income, correct? You've got your income for not only your sales, but what's the other type of income that you have? Commissions, correct? This is the thing that gets a lot of accountants. A lot of accountants aren't familiar with your business. In fact, most of them aren't familiar with your business. And if you ask most of them, Well, how many types of different income that you have? A lot of them will say you only have one. They only think that you're going to get income from the corporation, from Dallas. But we know that's not correct. A few years ago, we had a lady that came to us, asked us to review her 14 and 15 tax return. When we reviewed her return, we asked for her commission statement, and we got that, and we got her return. So we looked at the business portion of her return, and we found the commission statement, but that's the only income that we found on her return. So we called and asked, did you have any sales? She said, oh, yes, I had sales. And her sales were about $20,000 for each of the years that we reviewed, for 14 and 15. They weren't on the tax return. So for 2 years in a row, there were sales of approximately $20,000 that never got on that tax return. You think the IRS may have an issue with that? A little bit. So we asked. She said, I gave my accountant all the information, but I'm afraid ultimately who's responsible for your tax return? You are. So even though you may go to someone that's convenient to you, wherever you may live, they may be down the street. But the thing is, do they understand your business? The chances are unlikely that they do. And one of the things is this: you are ultimately responsible for your tax return. So even though you give the information to this accountant, if they don't apply it correctly to the return, again, I'm afraid you're going to be responsible for that. But make sure that if you have sales and commissions, that they account for those commissions. So if you have won prizes and awards and you've got recruiting, you're going to end up with a 1099. You're going to find this on your InTouch account, correct? Probably in a couple days from now. If you get a 1099 from the company, who else gets that 1099? Well, the IRS does, don't they? So if you get a 1099, the IRS gets a 1099. What is it that you absolutely have to do? You have to claim it, right? Yes. So who has to file in Mary Kay? Who has to file? If you have an item that you bought for $5 and you sold it for more than $5, then you have to file. So if you bought it for $5 as an example and you sell for more than that, you have to file. But oftentimes people will ask, well, I got in December, I only made a couple $100. Well, I understand that. Even as far as the IRS is concerned, they would tell you would have to file. But in all honesty, there would be very minimal amount of tax associated with $200 of income. That's just all there is to it. But this is the thing: even though you made only $200 of sales in December, what did you spend with your business? How much did you make? Excuse me. How much did you spend in the way of either Section 1, Section 2, preferred customer, all of that? If you've got any store whatsoever, then the chances are you're going to want to file, because if you don't account for that product that was purchased, in this case 2018, and you don't account for it in 18, what happens to the value of all that product for your tax return and future tax returns? It has no value whatsoever. So going back to my example of $200, yes, you may have only made $200, but if you've got a store, if you've got $3,000 wholesale on your shelf and you don't account for it in 18, then it just simply goes away. It just simply disappears. So the thing is this: not only depends upon how much you sold, which again, back to my example again, is only $200. What do you have on your store, and how much have you spent not only in your Section 1 items, like I mentioned before, Section 2, preferred customer, your mileage, meeting fees. Those are all the things that you have to weigh in on before you decide not to file. And I'll explain in a few moments how it's very simple to file. But keep that in mind. That is who has to file in this business. And that is why you want to file, so that you can get all the values of the purchases of even cell phone and internet usage and all of that stuff. Next area I want to talk about is typically for most businesses, it's the worst aspect. It is what? Keeping track of stuff. Keeping track of stuff is what I mean by that. Your receipts. So there's two extremes. Your business is no different than anyone else's. There's two extremes of keeping track of stuff. And what's one extreme? Doing nothing. That would be bad, right? You keep no receipts. You keep no purchase statements. Not good. What's the opposite extreme of that? Is where you're where I what I refer to as charts and graphs, where you're spending way too much time when you should be doing what? Recruiting and selling. So we devised this many years ago. It's very simple, but this is our bookkeeping system. An expandable filing system, and it's got little tabs here. And the whole idea here is that they're already done. This is already done for you. Nothing for you to do whatsoever. So what happens is you keep this where? You keep this in your car. So that when you go and try to recruit somebody at Panera Bread, for example, you take that receipt and you put it in meals. So another example is that if you drop off product at the USPS, you take that receipt and you drop it into office expense. So what happens is that by having this, you no longer accumulate receipts in your purse. You don't put any receipts in your console of your car because we know what happens with stuff in the console of your car. It gets gooey. We don't want gooey. That's not good. So what happens is that throughout the entire year, you put your receipts in here. It makes it very simple. So that when it comes to every January, February, or March, when it comes time to get your receipts out, you're not having to deal with your kitchen table and having to deal with the dogs and the cats and the spouses and the kids messing up all your receipts. They're already in here, already done for you. Easy peasy. For us, with shipping and handling, this is $28. Now, a lot of you will say, oh, I'll just make one of those up on my own. You won't. You're not going to do it. So by getting this, it's already done for you. You don't have to worry about knowing the tabs. There's a glossary in the front, and that glossary will explain everything you need to know about it. So then at the end of the year, you've got all these receipts already separated. Again, you don't have to worry about the kitchen table. So at the end of the year, you take not your phone, but you go to an office supply store, Walmart, whatever, and you get an adding machine. Now, why an adding machine? Because it spits that paper out, doesn't it? And when it spits that paper out, it's got numbers on it. So what you do is you take that adding machine tape and you staple it to those stack of receipts. Very, very simple. Trust me. A lot of people want to put Excel spreadsheets with it, but the problem is with Excel spreadsheets, the cells can be manipulated, can't they? So that does not work. And why am I even suggesting any of this is because this is exactly how the IRS wants it. This is how they want your information. Again, very simple. There's no software involved with this. There's no $2,000 computers involved. Just an adding machine and expandable file. And that's how you bookkeep. That's how you bookkeep. The next area I want to talk about is generally the most expensive thing on your tax return, other than maybe your purchases, and that's what? Mileage. And I know no one likes to keep track of your mileage. I get that. In today's world, you can use electronic means of which to get it. So whatever is easiest for you, do it. Do it. But you need to know the date, where you went, how many miles. Date, where you went, how many miles. So if Mile IQ works for you, that's fine. If you want to use our book, it's $3. It's whatever you wish. I know for the younger generation, these books are like cave paintings, right? I get that. But literally whatever works best for you. Date, where you went, how many miles. Now, with that, the IRS for this year is going to give you 54 and a half cents. 54 and a half cents. So what is that 54 and a half cents covers? every expense associated with your vehicle. That includes your mileage, your maintenance, and all of that stuff. So do you need to keep gas receipts? No, don't keep track of your receipts. Waste of time. But what you need to make sure that you keep track of is you got to keep track of your maintenance records. So why is that different than my insurance? Every time you get anything done to your vehicle, it's got the name of the vehicle on it and it's got the odometer reading on it. You have to have that. If you don't have that, you've got no mileage. You have to have a third party validate your odometer reading. I like at least 2 of these a year. You say, well, I take care of my vehicle or my spouse takes care of the vehicle. 100% of it. Well, I'm sorry, but something needs to be done by a third party. Now, if you live in a state where you have a state inspection, that will work. If you just want to get it inspected, maybe at no charge, that will work. It's got to be from a third party. It has to be. Again, you're not going to get value for the brakes being rotated or new transmission or new tires. You get no value for the actual expense itself. But if you don't have those receipts to verify your odometer reading, you have got nothing in the way of mileage. So keep that in mind. You have to have it to get the deduction. Have to have it. So you're going to get so many cents per mile in parking and tolls. Now, if you're a director and you are at the premier level and above, well, then you have to keep track of all your receipts. Again, that's only for you folks out there who have the premier level and above. You have to keep track of all your receipts. I won't go into a lot of detail about that. But the whole point here is for those of you, whether you got the premier level or not, everybody has to keep track of their mileage. Got to keep track of their mileage. Very important. And it can be worth a lot of money to you. Another huge advantage of dealing with Tiernans is sometimes we get very caught up with our mileage deduction. Well, we always consider that. We always look at whether it's reasonable. With every other expense on your business return, we always look at your mileage, one of them, to determine whether it's reasonable. How do we know whether it's reasonable? We're going to look at 2 things. We're going to look at where you live and how much money did you make, whether in sales or commissions. Do you have the income to justify your mileage? And at the same time, we're going to compare to see where you live. Because if you live in a highly populated area, then the chances are you're not going to need to drive as much as someone who may live in a not so populated area. It's like looking at the difference between Boston and North Dakota. North Dakota is a very nice state, but they just simply don't have as many people as what Boston, Massachusetts has. So if you consider 2 very similar people, they make the exact same dollar amount. Is it possible that the person in North Dakota drove more than the person in Boston? Well, absolutely. Just simply because there's more people in the Boston area. So we evaluate whether it's reasonable. And that goes for every expense on your business return. That's just not looking at just your mileage, but that encompasses everything. One of those things that we always look at, and here's a recruiting tool. Now, this is where we get into some recruiting ideas for you folks, is cell phone. If we don't see any cell phone usage, we're going to ask you about that. So what I'm referring to here is not only the cost of the cell phone, but the utility of the cell phone. You're trying to recruit somebody and you're sitting across the table from her at Panera Bread, as an example. And of course, that person's going to have a cell phone. We all have cell phones. But as a recruiting tool to you, you look at her and you suggest maybe you can write that cell phone off now because you are in. Is that a recruiting tool? I think so. She's going to have that cell phone anyway. She's going to pay either for a new one or the utility of that. But now because she's in this business, now it's deductible. Does that get people excited about being in your business? I would think so. So consider that when you're sitting across the table from from that person, not only tell her about the money that can be made, the prizes that can be won, but give her some food for thought that that device that she has in her hand can be deductible. What about your internet? Can that be deductible? Yes, it can be. What about the laptop? What about the desk? What about the chair? All of this stuff can now be deductible because you are in a business. Huge recruiting tool, in my opinion. But let's think about it for a moment. Cell phones, internet. Can we use it 100% of the time? No, can't do that. But the way that I look at it, something's better than nothing, correct? Well, then absolutely. Maybe that person's only using it 40% of the time for either internet and cell. Maybe they use it 50%. For those of you who've heard me before, what's that magic number that I've suggested that you use no more than? And this is based on my audit experience. I suggest no more than 70% because there's just a certain amount of personal use that's going to be used either on a cell phone or on the internet. No more than 70%. Now, you can use 10%, 60%, but again, no more than 70%. So when it comes to your cell phone usage, and I've seen a lot of cell phones over my days, and some of you folks have lots of people on these cell phones. But the thing is, can you take 70% as an example over the whole cell phone? No, just your specific cell phone. And how do I know that it's just your phone? I look at your business card, then I look at the cell phone receipt, and I can easily determine whose is whose. And as I'm sure most of you know, for most carriers anyway, that there's the primary person, and then there are secondary people on your cell phone. But because you can now write it off, would you rather be the primary or the secondary? In my opinion, be the primary person. So not only do you get the first dollar amount on the check, on the receipt, but then you also get your specific portion of the cell phone bill. Just again, some food for thought when it comes to the cell phone bills. Be the primary, bigger bang for your buck. The next item, though, is with the internet. For most folks, maybe not as many as it used to be, but we bundle our internet. We bundle the internet with home phone, cable. But is your home phone or cable deductible? No, it's not. None of it is. So I just want the internet. And just like the cell phone, can't use it any more than 70. Anything less than 70 and you're good to go. But again, looking across from that person at that restaurant that you're trying to recruit, I think these are all positive recruiting tools in my opinion. Good stuff. And look at it like this. The more you make, the more things you can have. How wonderful is that? Over the years, we've written off a boat, and at one time we wrote off a cabin. How can you write off a boat and a cabin? Well, recruiting. Now, for both of these ladies, they were both nationals, but they had the income to justify it. Now, when it was all said and done, maybe we only wrote off 4 or 5% for each one of those items. But is 4 or 5% better than nothing? Absolutely. If they weren't in a business, they couldn't write anything of it off. But they had the income to justify it. The more you make, the more you can write off. So if some of you are out there and considering going into this business, or someone's on the fence that you're trying to recruit, throw these things at them. The other thing that I would suggest is when it comes to taking a business trips. These are beautiful deductions, folks. I don't think a lot of people take me up on them, but I think they're wonderful. If you're living in the Northeast this time of the year, I'm imagining you'd probably like to be anywhere else, right? Well, maybe you know of someone who lives in South Texas or Southern California, Florida. Good time to take a business trip, right? But there's hoops you got to jump through, but they're not difficult. So how do you take a business trip versus a vacation? Simple. But one of the two important things is the first one is you have to have the intent to do business before you do business. You have to have the intent to do business before you do business. What does that mean? That means as I've suggested it many times before, you create an email. So let's say, for example, you have someone who lives in, you know, of someone who lives in Fort Lauderdale, for example. You want to go to Fort Lauderdale. You live in Massachusetts and you want to go to Fort Lauderdale in January. What's the IRS going to say that you have? Business trip or vacation? Vacation. So to prove that, you have to have the intent to do business before you do business. And oftentimes, in my opinion, the greatest thing for that is emails. Emails. So you know this person in Fort Lauderdale, you get 20 different names, you email all 20 people an invitation. We're going to be at this person's house on this date. We're going to have fun. You're going to win stuff. Great time. So if those 20 people that were invited, 15 show up. Now, those 15 people you have to do, you got to do it. You got to sell and or recruit. You've got to do this. What if you don't sell or recruit? What do you have? You got a vacation. Nothing's deductible on a vacation. But if you sell and recruit, and in our opinion, Tiernan and Associates, this is not an IRS thing, but this is a Tiernan Associates, at least $50 a day sales, $250 a week, recruit one person per week, or recruit one person per week. What would you rather do? Sell or recruit? Recruit. Then you got to go back, right? So you do this. You sell, you send them the invitation, you show up, you make the money, you're good to go. Now, what are you going to be able to write off? You're going to be able to write off your flight, hotel stays, Ubers, B&Bs, hotels, whatever. A lot of people are still nervous about it. So what I suggest to folks is that they can send me what they made and send me an approximation of the expenses. Send me the expenses. Give me an idea as to what it cost. And then I'll determine how much of that percentage you can have. Now, I'm not only going to look at that one trip, but I'm going to look at your business for the entire year. And then I can help determine what may be deductible for you. But to me, this is another huge recruiting tool. Because you just can't tell your supervisor at your W-2 job that you're wanting to go to Fort Lauderdale. You just can't do that. But now because you're in this business, you can do that. Consider doing that. All the places that you can think of. Try to recruit wherever you go. Huge money maker for you. Great recruiting idea for you as well. So that's taking a business trip. Now, I've got another recruiting tip, but before I go there, I'll explain Tiernan Associates to you for just a moment. If you work with Tiernan Associates, one thing that we ask you to do is for you to fill out an organizer. Now, the purpose of this particular organizer is twofold. One, it is 28 pages long, and a lot of people that are brand new to us would look at this and think, oh my gosh, there's all this information out there. It's overwhelming. I don't know what to do. It's not that bad. This organizer encompasses 95% of the taxpayers in this country. First part of the book is where we ask you specific personal tax questions, your name, addresses, W-2s, kids, but also included in that, we ask you about your rentals, your farms and ranches, and your investments. So the thing is that even if you don't have all this, what do? Well, you just simply move on. Don't worry about it. Some of those pages may pertain to you. Most of them probably won't. So you just go through the pages that do. And then the second part of the book is when we ask you about your business. And we ask you specific questions about your business. We ask you total section 1 purchases, total section 2, total sales, specific. All these questions are specific to your business. You just simply fill in the answers to the best of your ability. And as you go through it, and if you've got questions, do not hesitate to ask. We'll be more than happy to help you with these things. So the thing is this. If you deal with Tiernan Associates, then we ask you to fill this out. We ask you to fill it out. Now, there's a one-time charge of $5, and once you become our client, it's free to you from that point on. What we'll do is you fill it out to the best of your ability, and then you send us all of your important tax information like you would every other year that you filed your tax return. That would include W-2s and 1098 statements for your home, child care information, maybe education, all of that stuff you would send to us. And how do you send that to us? Mail it, fax it. We still take faxes. But how do a lot of people get us their information? They scan it and email it. Now, for a lot of you who've never been to see us, you may not be familiar with Tiernan Associates, and I can tell you that we've been in business for 80 years and you've still never heard of us. I get that. So you're still nervous. Your spouse is nervous. Then what you can do, what we started last year, is you can do a virtual reality appointment if you wish. There's no additional charge. What it is that we simply, you can look at us while we do your tax return. It's just that simple. But while, of course, you're looking at us, you can also ask us questions about your tax return as we actually do your tax return. It's just, instead of you sitting across the table, you're looking at us through a camera. Again, there's no additional charge. And I do understand for a lot of you folks who've never heard us, you're very nervous about dealing with anybody regarding your taxes, especially considering we're in Ohio and you may either be in Massachusetts or Illinois or Seattle, wherever. We've got clients throughout the entire country. So knowing all the different states, and that's not an issue for us whatsoever. So again, if you want to have a virtual appointment, we'll be more than happy to help you with that. So what we ask you to do in this case is you send us your information beforehand. What we ask you simply put a note on the very front of it, very obvious note that you want a virtual appointment. And as soon as we get your information, we'll give you a call. And we can set up an actual appointment that you, and if you have a spouse, you sit there on the other side and we'll talk about your tax return as we do it. Even though you may be in the state of Washington, we'll still be in Ohio. So that can be done as well. So the cost, what does it cost for us to do your tax return? If you have a taxing state such as Ohio, Massachusetts, Indiana, Oregon, California, if you live in one of those states as an example, and you have your personal along with your business, all of the above, on average, and when I say all the above, again, I'm talking about your W-2, your spouse's W-2, the kids, mortgage interest, property taxes, the MK business, and the state of Oregon as an example, Massachusetts. On average, for all the above, anywhere from $220 to $260. That is exceptionally economical, very economical. If you go to any of the franchise stores, that's going to be maybe not a down payment, but I can imagine they'd be another $100, $150 easy. Or any other accountant by that matter. And the thing is, the chances are you're going to have to explain to them the difference between Section 1 and Section 2. And if you have to explain that to them, good luck. Chances are you're going to be there very, very long time. But you do not have to explain any of that to us. We understand your business. So we understand your business, and we're not expensive at all. Now, are we going to be more than the do-it-yourselves that you're going to find at the Staples stores that come in a box? Yes. But we're also going to tell you what you can and can't have. We're going to tell you whether your numbers are reasonable or not. That's what you're paying for. Now, the thing is, we're open the entire year. If you've got questions about, you're here tonight to talk about your business, but the thing is, there's much more to our lives than just your business when it comes to your taxes. So let's say, for example, that your spouse is retiring. You got questions about that. We can help answer those questions. What if you've got a family member that has passed? Now you have some money because of that. Well, how does that deal with your taxes? Maybe you've lost your job and you're claiming unemployment, or you're getting a new job. All these things we can help you with throughout the entire year. This isn't just January to May for us. This is throughout the entire year. I have a full-time staff of people throughout the entire year. They'll be more than happy to ask you questions. And the thing is, a lot of accountants charge you by the hour. We do not. So if you've got a question in July, we're not going to charge you for that. Now, the thing is, most of you will never have an audit. I truly believe that. That's never going to be an issue. But for what a lot of you are going to have is you'll end up with notices from the IRS or from the state, whatever state you may live in. How would you end up with a notice? Let's say, for example, that you've got an investment person that sold a bunch of stock for you and you didn't even know it. So if you didn't know it, you never would have told us. So now you get a bill from the IRS for $7,000. And the first thing you want to do is go find the bathroom, right? Well, what you do is you send that notice to us. And maybe you don't owe 7,000 because it's a sale of stock. Maybe your basis associated with that is greater than the sale. Maybe you end up with money back. But whatever the situation, we are here to help you. So even though you're never probably going to end up with an audit, you may end up with a notice. We can help you with those. Maybe it turns out, maybe you took money out of your retirement account early in the year and you forgot about it. And you, of course, never told us about it. So now you get a bill from the IRS for $1,000. And maybe you owe that $1,000. I don't know, but we can at least explain it to you instead of you just trying to figure this out on your own. But we do help you with all that sorts of stuff. All right. So if you got questions regarding anything tax-wise, don't hesitate to call us, email us, message us, whatever is easiest for you. So we're here to help. We're inexpensive, and we're there throughout the entire year. And the way that I look at it, we've been dealing with the same ladies, same gentlemen for 40 years, almost 40 years. And we must have some clue as to what we're doing because we couldn't still work with the same people for that many years if we didn't know what we were doing. That's kind of how I look at it. I'm actually quite proud of that. So that's Tiernan and Associates. When you can get this stuff to us, the organizer. Now, this organizer, as you can see, it's old. It's a 17. The new ones are out. So, again, how do you work with us? You just fill this out to the best of your ability. Fill in the blanks. You got questions. Don't hesitate to call, email us, message us, whatever's easiest for you. And then send us along your W-2s and all that stuff, and we'll be more than happy to take care of you. Our turnaround time, 7 to 10 days is normal. Anything more than that, we're going to ask you some questions. Maybe we're missing some things. And you can get that to us next week when a lot of you get your 1099s or W-2s and all that good stuff. But we do ask you to fill out the booklet. Again, you got questions without filling out the booklet, don't hesitate to ask. So the next item that I wanted to talk to you about in recruiting is office in the home. Office in the home. This is a wonderful deduction. It's the same sort of scenario as with your cell phone and internet. You're going to spend money for the cell phone, right? You're going to spend money for the internet. Same thing for your house. You're going to heat the house, cool the house. You're going to have the utilities as such with a house. But now because you are in your business, now it's deductible. And that's how you have to tell these people when you're trying to recruit them. As an example, they're going to spend money to heat and cool the house and insure the house. But now because they're in your business, now it's deductible. Huge incentive to be in this business. Huge incentive. So what do you have to do? First thing is you have to measure the square footage that you have specific to your business in your home. If that's another room, that's fine. But when it comes to office in the home, I do not like the words bedroom, dining room. They're offices, and it must be exclusive. Must be exclusive. So even if you have a third bedroom and half of that bedroom is exclusive to Mary Kay, then you just simply prorate the square footage of that bedroom, and it can work. Now, after you've measured the square foot, then you measure the total square footage of the house, or in this case, rental. If you rent, that works the same. So then for most of you, if you take the square footage that you use for your business versus the square footage of the home, you're going to end up with a normal percentage of anywhere from 12 to 17%. Now, that's not set in stone, but that is normal. It's a normal percentage. So as a result of that percentage, now maybe you can take 12% of your utilities and 12% of your home insurance. None of these are deductions that you've ever been able to take before. But now, because again, you're in your business, you can take these things. So keep that in mind. Another huge recruiting tool. They're going to spend the money anyway, but because they're in your business, now it's deductible. Great deduction, in my opinion. Now, the other thing is, what about for those, another recruiting tool here is hiring children, grandchildren. This is your children and grandchildren. I'm not referring to the neighbor's kids here. Children, grandchildren under the age of 17, under the age of 18, can be deductible if they're actively working in your business. I have a 7-year-old and a 13-year-old. I have not started paying my 7-year-old, but I pay my 13-year-old. She was actually at my office today again, helping me clean. So, how do you determine whether it's deductible or not, and how do you do it? First of all, you have to determine the wage based on their age. Wage based on their age. My 13-year-old, in my opinion, $7 an hour. She helps clean up. Sometimes she goes through the files during tax season, but the majority of what she does is clean up throughout the entire year. So, as for my 7-year-old, again, if you have one of those, maybe a couple dollars, $3 an hour. So you gotta establish the wage based on the age. The next thing you have to do is you have to establish an itinerary of what they're going to do for you. What are they going to do for you? Mail envelopes and such. So now that you've established wage, right, their itinerary, now you pay them throughout the year. Do not just pay them once. Pay them throughout the year out of your business account. Once it leaves your business account, you write them a check, then it's got to be deposited into their savings account. Has to have a paper trail here. Very important. Now, what happens once that money is deposited in the account? It's whatever you wish. Children, grandchildren under the age of 18, no tax implications. In fact, if you keep it under $600, there's no paperwork involved. Just got to make sure you keep a copy, in my opinion, keep a copy of those checks. Proof that you paid the kids. Wonderful deduction. Pay them $599. Beautiful deduction. Again, children, grandchildren under the age of 18. And this does not include taking care of the other children in the house. It doesn't work for that. So, whenever I get a group of people, whenever I speak with a group of people, I always talk to them about those folks. Now, maybe you're one, maybe you know of someone who hasn't filed a tax return. This past extension season, October of 2018, Tiernan Associates has never filed as many tax returns as we had that were old. I'm talking about 14, 15, 16, 17 tax returns here for the years 14 through 17. Filed several of them. In fact, we actually, this past summer, we filed a 2003 tax return. The next month, we filed the 4, and the month after that, we filed their 5. I haven't filed anything for them since, but my point is this. If you know of someone, or if you are that someone who hasn't filed the tax return, do so. And the reason I'm suggesting that you do so is if you owe the federal government or state government, there's going to be interest and penalties. That's just the way there is. Now, if you get money back, then there isn't any interest or penalties. But this is the thing, you won't know until you actually file the return whether you get money back. And the thing is this, is that for a lot of people in their own business, they haven't filed their tax return. It's that monkey that just gets bigger and bigger and bigger. And eventually it impacts your tax return. It hurts your business. It really can possibly hurt your business. So being a detriment, file them. We can help you with that. Baby steps. This organizer that I was just alluding to a moment ago, of course it says 17, but they go back further than that. So you simply go to our website and you go get the one that you need, and you print those out. And again, we'll help you with that baby step. You get one, you're done, you move on to the next. And if in this case, if you haven't filed the 15, you file the 15. Then you file the 16. Baby steps. But we can help you with that. Get them done so you can get that monkey off your back and your business will grow. Consider doing that. So, I've got 3 things in which to sell you folks. We've got the organizer. It's $5. $5. Once you become our client, it's free to you from that point on. But if you work with Tiernan Associates, and again, it would say 18, But if you work with Tiernan Associates, we have to have you fill out one of these booklets. $5. This is the booklet that I was referring to, where you fill in all the blanks, personal and business. Got any questions? We'll help you with it. $5. The third thing I wish I had to sell you is our mileage log. This is $3. $3. If you use this or whatever, you got to keep track of it. It's worth a lot of money to you. Then the third thing I wish I have to sell is this expandable filing system. As I mentioned before, it's got all the tabs and it's already done for you. Very simple. All you have to do is just simply take those receipts. You just simply take those receipts, put them in here throughout the year, and you'll be good to go. Very simple. So that way you don't lose receipts. You don't get them throughout the house. At the end of the year, you take that calculator, remember, you add them up. Very simple. Now, if you wish to purchase, this was with shipping and handling, $28. And again, you'll think, well, I'll just do it myself. You won't. It'll be July and you're still thinking, I'm going to make one of those up myself, and you never do. So it's already done. How do you wish to contact us? You can simply, our phone number is area code 937-832-0271. 937-832-0271. Now, if you've got any questions, don't hesitate to call us on that number. Now, for some of you, if you wish to email me, I'll give you my email address. It's jody@tiernansassoc.com. Again, it's jody@tiernansassoc.com. Any questions, don't hesitate to ask. The thing is, instead of hearing it from what you think was correct, or maybe they're not even sure that where the information came from, blah, 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 just simply ask us. We will tell you what is correct. Now, if you also wish to communicate with me, go to my Facebook page, Tiernan and Associates, LLC. There's webinars on there just like this. They're an hour long. There's lots of information on there as well. If you wish, just simply friend me there. You can message me there if you wish. So that pretty much takes up my hour. Again, if you've got any questions, do not hesitate to ask. We are here throughout the entire year. I hope for the last hour you've been able to take some of this in, all of it. But again, if you got questions, don't hesitate to call, email us. If you wish to purchase any of these 3 items, you can, again, call, email us. But one thing definitely I would suggest, even if you say, maybe I got to talk to my spouse, I'm not sure what we're doing this year about our taxes, I really like this person that's down the block, then I would definitely recommend, for whatever, still get this organizer. It's only $5. It lists all those things that you can have for your business, for your MK business. I would definitely recommend doing this. But if you've got another business and your spouse is very comfortable with the person you're dealing with, then we only may just do the business part of your return. We can just do that. It's whatever you wish. Most of our clients, we do the entire return, but whatever you wish, we can help you with. And like I said, questions, email, call us, or message me. I appreciate everyone's time tonight. I hope you have a good night, and thank you very much.